Hey, new listings are down 24%. Pending sales are down 28%. Now, if those are the only two numbers you saw this month, you'd swear the South Bay housing market just fell off a cliff. But here's the twist. Closed sales are actually up about 8% from a year ago. So what is it? Is the market freezing up or is it heating up? Over the next few minutes, I'm going to show you exactly what's happening here in the South Bay of Los Angeles and what it means whether you're buying or selling. Now, let's first look at some macro numbers to get a bird's eye view of what it looks like today and then go over what's driving those numbers. Right now, the median home value in the South Bay is $967,845. For Los Angeles, it's $875,000. And for California, it's $787,000. And for the entire US, median home value, $369,000. Now for a city-by-city breakdown, here you can see that it's a mixed bag here in the South Bay. Some cities like Lomita, home values are going up over 9% in the last year, while cities like Inglewood, values have dropped a little, over 6%. So let's start with the supply side because that's really where everything begins. In May, there was 426 new listings coming out in the South Bay market, which is down 24.1% from a year ago. There was a total of 1,024 homes for sale throughout the entire South Bay, which is down 17% from May of 2025. And homes going into contract or pending sales, they're down 28%. Translation, there's simply less to buy out there than there was a year ago. Fewer deals getting started each month. Now here's the part that surprises a lot of people. Even with all that, closed sales, homes that have sold, are up 7.7% over a year ago. More homes are actually crossing that finish line than of May of last year. And while we're talking about closings, let's look at the range of homes that sold last month. The highest priced closed sale was this 4-bedroom, 7-bath, 3,947 square foot home on a 2,443 square foot lot that sold for $15,500,000 right on the Strand in Hermosa. It's the only photo that was available. The next, the lowest price home would be this condo, 1-bedroom, 1-bath, 593 square feet, and it sold for $260,000. So around the South Bay, there really is a home for everybody. And the homes that did hit the market, they're moving fast. The median home goes into escrow in just 13 days. That's 19% faster than a year ago. So half of everything that hits the market is spoken for in under 2 weeks. One more number, and this one matters, is homes are selling for 99.3% of their original asking price. Not the reduced price, the original price. Well-priced homes are getting almost exactly what they ask. And months of supply, kind of how we balance supply and demand, 3.4 months. That's down 17%. Now anything under 5 to 6 months is still a seller's market. So despite the doom and gloom headlines, the South Bay is still tilted towards sellers. So let's talk about what that means for you if you're a seller. The pros are strong. You've got less competition than you had a year ago. Fewer homes are on the market, meaning your listing stands out. Buyers are still active and motivated. Homes are selling in under 2 weeks, and you're capturing nearly your full asking price. But here's the catch, and it's a big one. That 99.3% number rewards homes that are priced right from day one. The buyer pool is thinner, and at today's interest rates, if you're overpriced or you put a tired, unprepared home on the market, it will sit and go stale. And once a listing goes stale, you end up chasing the market down with price cuts and losing money because buyers are wondering what's wrong with that home that's been sitting so long. Now the winners in the market are sellers who prep the home properly and or price correctly right out of the gate. Do that and the numbers are absolutely on your side. Now if you're a buyer, I'm not going to sugarcoat it. The tight inventory is your biggest challenge. While active listings are down 17%, there's just less to choose from and the best homes are gone in days. You have to be ready, pre-approved, clear on your criteria, and able to move quickly. But it's not all bad news. The frantic 10 offer bidding wars of a couple of years ago, that's all cooled off. We still get multiple offers, but nothing like it was. Price reductions are becoming more common, especially on homes that have been sitting or need some work. And you actually have room to negotiate now. And that doesn't just mean, and you shouldn't just think about price, as you see homes that are selling at market value. Think about other types of concessions and rate buy downs and things like that. Again, talk to your realtor, get somebody to negotiate on your behalf, get the best deal you can. Now, if you've got equity or you're moving up, this is a market where a prepared, decisive buyer can win without overpaying. With maybe a slight easing of rates in the near term, if Middle East problems resolve, but the Fed and bond market is really not that optimistic right now. Inflation's still strong, job numbers are strong. That puts pressure on keeping rates up, at least keeping them stable for a little while. So why is the market behaving like this? Well, it comes down to three forces. Number one, mortgage rates. We're sitting around 6.5% right now, and they actually ticked up a little earlier this year, driven by inflation that really won't cool off, and a lot of global and geopolitical uncertainty. High rates kind of do two things at once. They create what's called that lock-in effect. A huge number of homeowners are sitting 2, 3, 4% mortgages from a few years ago. They're not about to trade that for a 6.5% loan unless they absolutely have to. So they just don't list. That's right, there's just new listings are down that 24%. Now, number two, California's structural housing shortage. Our state is short roughly 3 million homes. And here in the South Bay, it's even tighter. We're hemmed in by the coast limitations of land and strict zoning and height restrictions and coastal commission oversight. And we have lots of things that limit what we can do. And you can't just build your way out of it. That keeps supply permanently low and prices supported up. And if you're really thinking about solutions of higher density, it's really not always the answer. It sounds good in theory, but as a realtor, that would mean more houses to sell, but jamming people closer and closer together and changes our neighborhoods and creates lots of problems our communities are not built for and really can't support. So, number three, South Bay demand. It's just different. A lot of buyers aren't purely rate driven. They're using equity and stock compensation and generational wealth, and so even when rates are high, qualified buyers keep transacting. That's exactly why closings are up, even while listings are down. The deals are happening. They're just a smaller, more serious pool on both sides. Now, putting it all together, you don't have a crashing market. You have a tight, fast, segmented market that rewards preparation on both sides of the deal. So here's the bottom line. Less inventory, faster sales, near full asking price, still a seller's market. But a market where strategy matters more than ever. Whether you're listing or buying, the people winning right now are the ones with a plan and the right pricing. If you're looking to make a move in the South Bay this year, don't guess. Let's talk through the specifics of your neighborhood, your price points, what you need, because the strategy is different in every pocket of the market. I'm Steve Huhta from Century 21 Coastal Properties and Houses in South Bay.com. So call me or drop me a question below in a DM. I love talking to the community and helping answer real estate questions. Bye for now.